Take a look at the gold prices, which had declined quite sharply yesterday to $12.22, but holding around $12.32. So nearly $10 of a gain up coming in from the kind of 34-month lows that you saw in the markets yesterday. The prices have tumbled nearly 12% in past 8 sessions, and we have seen some bit of a buying coming into the markets today after you saw the US GDP numbers coming in on the weaker side, and that has eased fears on an abrupt end of the Fed bond buying program. You have seen the worst quarter coming in for the gold prices since 1920. The metal, however, is still not far from Wednesday's near 34-month lows coming in for that one. The crude prices in the meanwhile have continued to rise for a 4th straight session as investors traded with conviction that stimulus from major central banks would stay in place for some time now. The U.S. crude prices edged higher as weaker than expected economic data in the U.S. eased fears that the U.S. Federal Reserve would soon cut back its monetary stimulus program. Crude prices on your screens, 0.25% on the higher side, is trading at around 1-week highs. You also have seen a turnaround coming in for the Brent prices, which are holding at around $102 per barrel in the European session right now. Let's also get in then. Chirag Kabani is technical analyst, askchirag.com. Chirag, what's your sense now coming in for the crude prices? Because we haven't seen much of a sell-off here. Every dip has seen a buying opportunity coming in. Do you think that's the way it's going to be going forward?
At this point of time, if we look at the crude prices since the last 2 weeks, we have seen one of the major sell-offs coming in crude prices from $98 to $94, and current week we are seeing a good pullback coming up around till $96. At this point of time, the pattern which is coming up on the short-term chart, it is looking quite bearish, and I'm expecting crude prices to slide again downward towards the important support of $92. So in the domestic market, one can look to take shorts around the 5800, 5810 levels with a stop loss above 5850 closing basis for downside target till 5600 levels.
Vijay, how would you look at the natural gas prices now? Because we've seen a continuous decline coming in for that one. Much declines, or do you see 200 could be challenged?
Manisha, natural gas is looking weak at this point in time, and the 240 level, which I've talked about very frequently throughout this calendar year, is likely to act as a very stiff resistance. The closer you get there, I think the more selling pressure is likely. In terms of declines and supports, I think 218 and then 221 levels are levels to watch out for in the absolute near term. Unless and until 218 is violated, I think there is a possibility of there being a tradable bounce all the way up to 228 or maybe even 230. So we are kind of ranged between these two levels. I'm looking out for either a breakout or a drawdown beyond these points before I could take a fresh call.
Chirag, how would you look at the base metal prices now? Because today has been a good day for all asset classes, including the base metals as well. But would you look at this opportunity as a sell, or do you think there could be another day tomorrow for a buying here?
So if we look at the short-term technicals of the base metal, after the sharp fall coming up in most of the base metals for the last 2 weeks, this week we are seeing a corrective pullback. I'm expecting copper prices and nickel prices to give a corrective bounce back upside. Overall, the long-term picture is looking bearish on most of the metals. This corrective pullback on copper can continue till around 411 to 416 levels. On nickel, around 840 to 860 levels, which can be used to create fresh medium-term short positions. Overall, once copper breaks 392 on the downside, again the next new downtrend would start targeting the lower side end of 366. On nickel, 805, 810 is important support. Once that is broken down, prices could head lower till 720 to 740 in the medium term.
Vijay, which metal are you really working with? Especially copper. We haven't seen 410 hold quite successively in last many sessions. How would you look at the levels?
Manisha, I think there is a persistent weakness in industrial metals. And I talked about deleveraging day before yesterday. If you look at asset classes, precious metals are down, industrial metals are down, even agri commodities look like they are under pressure, which can only indicate one and one thing only. There is a sense of discomfort, if not a sense of extreme stress in the psychology in the markets, where people are tending to convert to cash rather than hold positions in leverage markets. When this kind of deleveraging occurs, I think the exit is basically broad-based and secular in nature. There is unwinding across the board, and this kind of unwinding might just persist and breach technical support levels to a point where declines can actually become exaggerated. At this point in time, I don't feel any sense of comfort or confidence in going long across any industrial metal. However, having said that, I think unless the previous swing lows of May are violated, I don't want to go short either. So give me a low below 97, 98 and a half on aluminium, and I might just contemplate shorts. Give me a low below the 782 or 788 levels on nickel, and I might say that there are fresh declines available. But till that time, I think the markets are basically seeking a sense of direction. And as long as the markets don't know where they are going, nor do I.
Chirag, how would you look at the gold and silver prices with the kind of gains that we have seen in the markets today? Very slight though. How would you read them? And would you say, what kind of a decline really, or what kind of a support are you looking at in case of gold prices in the Indian markets?
See, in the Indian markets, gold prices now have an important support at the levels of 25,600 to 650 zone. Till the time gold prices are able to hold on this level, I'm expecting a range-bound trade on the gold prices with resistance coming on the higher end at 26,500 levels. This is an important gap resistance. Till the time this gap remains unfilled, which was created 2 days back when this large sell-off came in, then the prices could trade in this zone or head lower further. Once prices are breaking the previous swing low of 25,200, prices could head lower till 23,500 in the medium term.
40,000 and below, second straight day of that one, Vijay. How are you looking at the prices?
Manisha, we talked about 38,000. I think that's coming. And I'm not saying a round figure of 38,000, give or take a few hundred rupees here and there. So 38,000 to 38,500 is where I would watch the next support for silver. Now, provided volumes, open interest and prices come around to converge to a indication where they tell me that there is some kind of a semblance of support here, I do expect the probability of a tradable bounce. I'm emphasizing on the word tradable. I'm not calling for an absolute hard bottom. I'm not saying the trend has reversed. All I'm saying is that the 38,500 levels, silver might just be poised for a tradable upthrust, which of course at some point in time will get sold into. But if price, volume and open interest indicate that there is a covering of shorts and a fresh buying emerging in, I think you could get 1,500, 2,000 rupees on the upside if you buy at 38,500.